For 5 weeks now, we've been tracking the deals. Whoop at $10 billion, Champ at $500 million, women's soccer franchises selling for $205 million, Malcolm Jenkins $500 million, $3.8 billion deployed in April alone in the sports asset class. But this week, I want to zoom out a little bit. We want to zoom out, way out actually, because this isn't just a sports story. $300 billion in venture capital was deployed in Q1 of 2026. That is the largest quarter in history. 80% went to AI. OpenAI alone raised $122 billion themselves. And when that much capital concentration in one sector, the overflow doesn't sit still, and it finds the next undervalued frontier. That frontier is quite literally sports, but the pattern is universal. That same validate first, scale second model that built Palantir, that built SpaceX, Shield AI, all the largest young businesses in the world. That's the same shift from endorser to owner that honestly Taylor Swift, when she re-recorded her masters in the shift, athletes are making right now, right? It's the ownership economy, same as the creator economy that turned Mr. Beast into a CPG brand, Beast Industries, which we got to uncover ourselves. And this episode, we're going to be connecting those dots between venture capital and sports, between the creator economy and NIL, between defense tech and the locker room validation that we see every single day. Because the thesis isn't that sports is special. The thesis is that sports is the next application of the most proven pattern in modern investing. This is Playbooks and Portfolios with your hosts, Liam and Sean Clifford. Let's get into this macro environment. Welcome, buddy. Excited for you, brother. How was the trip to Indy? Are you feeling ready? It's for this weekend, obviously. Why don't you share with everybody how you're feeling going into week one with the Colts?
Yeah, feeling good. Drove down actually today, so it was Monday that we're recording this. So just got in a little bit ago, staying at my friend Tyler Warren's house, so at his place for the week, and then head to the hotel on Thursday and get ready for rookie mini camp. So should be fun. Super excited about it. Excited for the opportunity. I know we've spoken about it a lot, but opportunity is the biggest thing, and making the most of it is what counts. So just excited to be able to live out my dream. Excited to be able to get a fresh start, like I spoke about on the last couple episodes. Is the thing that I'm most excited for is just being able to prove myself in a new locker room with new teammates, new coaches, and just a fresh, clean slate to show off the player that I can be and kind of the God-given abilities that I've been given. So super excited about it. We'll be jumping in on Thursday and be ripping the rest of the weekend. So fired up.
No, super excited for you. For people listening, when it comes to a rookie minicamp, you're jumping in. Like, what are you looking to prove in a rookie minicamp? Because, like, it's different than OTAs, it's different than fall camp, and then obviously it's different than the season. But, like, you have a 3-day window, very short, 2 practices. What are you focusing on to show off your abilities in that time?
Yeah, it's a great question. I've obviously spoken to a lot of people. I've spoken to you about this because you've been through it. And the biggest thing that is a common theme is going into the building, showing off the type of person you are more than anything. Obviously, the play is important, and they'll be able to pretty quickly see how good of a player you are when you start moving around. But the most important thing is getting there early, staying late, knowing what you're doing, knowing the playbook, having no missed assignments and no MAs on the field. That's the biggest thing. I think rookie minicamp, majority of it is all about, okay, who can we bring in that we can trust, that we know can pick up a playbook quickly, play football at a high level, be a good person, and then ultimately be able to carry that through the rest of the summer, OTAs, into fall camp, and then obviously into the season. So that's what I'm trying to prove. That's always kind of been my thing anyway, is a guy that's just going to be in early, stay late, know what he's doing, and then obviously be able to make plays on the field, and that take care. That's a given. But when I look at rookie minicamp, kind of taking it back, and what I want to focus on the most is just showing the type of person I am when I'm in the building and talking to people, and then also just knowing what I'm doing and being able to pick up things really quickly.
Well, I'm rooting for you, brother. I know what it was like to jump into that rookie minicamp. I know it's going to feel like 1,000,000 miles per hour, but I feel like you'll be able to slow it down. Good thing that you're in Indy early and often and can kind of start to break down a little bit of playbooks, start to have some conversations, get some routes up, but you'll crush it. Really excited for you.
Appreciate it.
Zooming out, though, to the reason we're here, Playbooks and Portfolios, right? I mean, and to zoom all the way out, right? Jumping in first segment, Q1 2026 here has broke every venture capital record in the history of venture. $300 billion in one quarter. And let me just throw the numbers out so that way people understand what we're talking about. 300 billion, all-time record. Q1 alone totaled 70% of all venture capital spending in 2025. So the VC market is as hot as ever. I want to talk about that in a second of why I think so personally and what I see in founders. But AI captured 80%. We kind of saw that coming, right? Total global VC funding in Q1 there, 242 billion to be exact, at least what was quoted. The 4 largest VC rounds ever recorded all closed in Q1 in 2026. That's OpenAI, 122 billion, valued at $825 billion valuation. Wow. Anthropic, 30 billion, XAI, 20 billion, and Waymo, 16 billion. Those 4 companies alone all raised 188 billion total, 65% of that global VC in the quarter. AI startups captured 65%. The list goes on and on. You're seeing entrepreneurship drive like never before. Liam, you're breaking down with tons of founders why they believe that they're the next great thing. I mean, why do you think that we just saw such a monstrous record quarter in venture? What's your thought process? I mean, you talked also just a precursor. You've seen 1,000 companies. You've talked to probably over 500 founders in the last year. You have a pretty good beat on this. Like, what's your thought?
Yeah, I think right away what comes to mind, and a lot of things you just read, is AI and venture groups looking to allocate dollars into AI companies. And like you just said, I think, what was it, 80% of the investments went to AI companies. But with that being said, when there's 80% going, or whatever the number was, 70% going into these AI companies, there has to then be money left over for other industries to diversify and be able to grow. And that's where, when meeting with these founders, it's actually exciting, is that there's more capital flowing into, we've talked about this a lot, but there's more capital flowing into these markets, specifically in sports. I think I listen to podcasts all the time, and all the business podcasts, no matter who it is, somebody that has nothing to do with sports is talking about how sports as an asset class is important, and it's growing, and it's something to get involved with because it's safe. It's not going anywhere. For the reasons we've talked about, COVID, for example, sports was still happening. It never stops. It's always going to be there. People love it. It's one of the few things that AI can't replace ever. There's never going to be robots or fake games going on. It's just not going to happen because the viewership would go down. So zooming it back into what we're doing when meeting with founders, the use of AI, whether you're an AI company or not, there needs to be implementation in some way, shape, or form into your business, because that's what.
How are you seeing that though? Like when you're in these conversations, is it a day-to-day perspective? Is it like more of a weekly reporting? Is it all of it? Like what's been the main focus for these founders?
Yeah, I mean, we invest in seed to Series A, so earlier companies. So they're not going to be doing anything crazy, but I think it's as simple as just what can they do by using AI to make their systems easier. So whether that's CRMs or just operations in general, or helping them track, or note takers, or whatever it is, founders are going to be implementing AI, and they are, for the most part. The ones that I talk to that tell me they're not trying to implement AI, I usually am kind of like a little hesitant on why, and probably won't talk to them again, because it's something that needs to happen. And those founders will ultimately win. Obviously, we all know, if you've ever used an LLM or any type of AI, if you don't know how to operate that, or if you're going to be like, oh, well, this isn't for me, like I'm not going to get on this new wave, you're going to get left behind.
Yeah, for sure.
It's not a hot take, it's just a fact. So when I talk to founders, majority of founders, I would say 90% of them to 95% of them are implementing AI in some way, shape, or form into their business. And typically it's from an operations perspective, CRM, tracking, a lot of ways to kind of cut costs. And rather than hiring more employees, whether it's more sales employees or somebody on the operations side, implementing AI and being able to save money, especially early on in the business, is huge. And that's where I think there's a lot of money flowing in to now startups and companies, and specifically for us in the sports space.
Yeah, I personally think that it's not a revenue driver, it's a cost enhancer, right? It lowers the cost it takes to build. And you're seeing it, I mean, you saw it with the founder, the solo founder that just hit $1 billion valuation, right? We've seen it kind of take over in a bunch of different ways. I personally take it in 2 categories. This is how I think. I think it's great for capital enhancement, right? How do you track your capital, and how do you actually put capital work in the best way, shape, or form? And then I think that it's people management. And I say that, I think about just how I utilize it. I mean, I have quite literally my whole contact book in one CRM that then is transported and always updated within Claude. Then that Claude is also pulling my LinkedIn connections. All those connections live in one specific LLM and one specific chat box and project, then whenever things pop up and founders need an intro, I can now scan a database of over 5,000 contacts. And also, to be honest with you, when you talk about stewarding people in the right direction, you're always looking for reasons to add value to people. Like, you're always looking for reasons to have a conversation with somebody. Especially, I mean, you want to keep up with people. Like, it's the name of the game in this industry, especially in the venture industry. And I think that that's how people need to utilize it the most right now in the current moment, because it'll continue to transform, it'll continue to shape itself. But I do believe that if you can really, really hone in on how can I find, it's all about connecting the dots, right? It's all about being able to pattern recognition and being able to quickly identify opportunities in the market and then capitalize on it. That's as easy as it is. And I think that it's never been better. And the founders that are able to do that the fastest and implement and not get scared of AI, but really, really utilize it, big time winners. And you're seeing that. That's why you're seeing $300 billion invested in one quarter.
A perfect, simple, and easy example for everybody listening is one of our portfolio companies, Intake Health. Our managing partner, over the last 2 days, probably spent a total of an hour each day creating a website through AI for our portfolio company. Rather than paying somebody, I mean, websites back when we launched our company back in college, I mean, that website costs us about $4 or $5 grand to make. And then you got to it, and it's a whole process. You can make a website through AI in 20, 30 minutes.
Yeah, now it's a project over a glass of wine for about 30 minutes. It's incredible.
A nighttime wind down project.
Yeah, literally. So, I mean, I think that's why you're seeing this shift. I mean, a very interesting thing here. The San Francisco Fed convened a VC roundtable in early 2026 and reported that investors are increasingly pivoting to vertical specific AI applications targeting regulated and complex industries. Now, that's a lot of mumbo jumbo in my personal opinion. What that really truly means is they're trying to take AI applications and not just throw it at an idea and try to now create something new. They're trying to take established businesses, which is what I love personally investing in as well. Take established businesses that have a great consumer base and vertically integrate it through that. And it's in the picks and shovels there, right? It's investing in the picks and shovels and what's really truly making these industries go, right? You talk about healthcare, legal, financial services, sports performance is one as well. You take those picks and shovels companies that can truly, truly move the big boys up in their opportunities and honestly shrink the margin. It comes with a cost though, right? You're seeing job loss, you're seeing some unique unique opportunities, but also some sad stories as well. But AI is absorbing much more than just capital. It's absorbing everything in the asset classes, and it's affecting every sector. It'll be interesting to watch on a macro scale what it can do. But moving on past AI and honestly, the last quarter, big news coming out of the Big 12. Big news coming out of the Big 12. Redbird Private Equity now has entered the conference system officially. The deal is the most structurally significant development in college sports finance this year, and honestly, probably in college sports to date, other than the House versus NCAA case. It's the first private equity deal with a major conference, and it directly impacts the NIL ecosystem that you just came from, Liam, that we built a company in. Just to spray and pray the deal real quick, Big 12 presidents and chancellors ratified a 5-year partnership with both Redbird Capital Partners and Weatherford Capital on April 29th. 3 components of the deal: $12.5 million capital infusion to the Big 12 for commercial development. Secondly, strategic partnership on sponsorships and revenue generation. And third, individual schools can opt into a $30 million credit line. Redbird reportedly gets no ownership stake, no equity, no governance power, but the returns are going to come from the revenue growth and the next media rights negotiation. I would have loved to see that deal. Holy cow, that would have been really interesting. That would be a fun afternoon, that's for sure. Liam, what's your thoughts on private equity now entering the conference space?
Yeah, it's this gets fun and this gets interesting. And I think when we break it down even more, looking at kind of Redbird specifically, Redbird gets no ownership stake, no equity, no governance, no power. What ultimately they're looking to do, in my opinion, is Redbird, when you look at it, is the second largest stakeholder here. Paramount, which owns CBS and is reported to be acquiring TNT. So when looking at the media rights deals that are going to be coming up here, which I think is in 2031, those expire. Redbird is now making this play to then hedge their bet to be able to negotiate way better deal for the media rights for their companies that they have a big stake in. And that's really where this is coming from. Now, I think it's good for the Big 12. I think that anytime you can get some capital infused for no equity is always an interesting thing, and we'll see how that goes. But there was another stat on that list that the average roster value for both football and basketball in the next year will be valued at right around $50 million. So with that being said, are they going to be able to pay athletes if they don't get money from private equity or from outside capital? Probably not. So if you want to compete, the Big 12 has a chance here to compete with the Big 10 and the SEC and these so-called conferences that have been better. And obviously, me being a Big 10 guy, I do think that they're better than the Big 12 and the other conferences. So now will we see the Big 12? Will we see more athletes going to the Big 12 out of high school because they're paying the bigger bucks, because they have private equity and SEC, Big 10 doesn't? Or will we see another private equity group come in and do a different deal that's even bigger for the Big 10 and SEC? We'll see.
Well, they're going to have to play catch up. The Big Ten and the SEC is now fallen behind in the route of capital infusion, I guess is probably the right way to put it. I think that personally, I'm hesitant on the deal. I'm very hesitant, to be honest with you, because we talked about it on the last episode, right? We talked about the fact that ultimately private equity wants to gain access to these sports assets purely for the fact that they can continue to grow their piece of the pie within the ecosystem that they've already built. And now you're putting a lot of handcuffs on a deal in the future that needs to be negotiated correctly, right? Because the Big 12, the SEC, and the Big 10, ultimately, when there is, and yes, quote me on saying it, I don't know if I'm the first to say it, I don't think I am, but eventually there's going to be a players association and there's going to be a collective bargaining agreement. That is just how this is going to work. It is going to be a professional league. Like that's just, it's bound to happen. That's just the nature of this game. Will that deal be negotiated correctly now that, like you said, Redbird, second largest shareholder in Paramount, they own CBS and is acquiring TNT. Now, what do those negotiations look like? Do the CEOs of CBS really have enough leverage to go in that deal and fairly look at the revenue being produced? Do they really fairly get to look at the Big 12 and say, hey, you know, this is the deal that we want to present? Or is Redbird going to come in and say, you know what, no, you got to really up the ante because they're trying to get their nut back on the $30 million that they're shoving out to every single school as a credit line? Kind of a terrifying fact. And, you know, if I'm CBS right now, I'm saying, okay, this is going to be an interesting play in the future. I'm probably a little nervous on what those negotiations are going to look like.
Yeah, I mean, it's a long-term play, obviously. Yep. Private equity venture, it's a 10-year game. And ultimately, like I said, what I think's happening here is they're waiting for that media rights deal to come around in 2031. Probably also hoping that there's not a collective bargaining agreement happen by then, and then they can set the terms and they can set the price.
Sure.
And figure out what they can then reap in return. And I want to ask you a question, Sean. You brought it up, but $30 million credit line. You're a
GM,
a GM or an athletic director of a school. Are you taking that credit line? What are you doing?
Oh, I'm taking the equity. I'm taking the credit line. I mean, it's there for the taking. You're telling me that now I have $22 million plus this $30 million credit line. I'm running that down to zero for sure. I'm also going directly. I mean, I think that if I'm the Big 12 teams, I'm not saying that there's going to be collusion behind the scenes here, but I would be going after every player in the SEC and Big 10 because now you're fighting because eventually, how does this look? Is it the East versus the West? Is it the Big 10 versus the SEC? But now the Big 12 does this massive deal, and now they're saying, no, don't. We're not going anywhere. Our teams are going to see this through as well. They're almost stamping that they're going to be here for a long, long time. How does this deal look in the future? I mean, how do the conferences mesh? How do they ultimately get along? It's going to be interesting, and I think recruiting is going to see some serious issues, potentially. Now, think about it. If you have $50 million to put together a roster now, you have, call it 90 guys on scholarship. Is that still the stat? Is it 90 guys on the scholarship program? Thank you, Sam. In the background, 105 scholarships total. Okay, so now you're saying that each player can get about $500,000. Liam, coming from Penn State, just a year ago, last year, is everybody getting paid $500,000? Is it like, I'd have to imagine no. And then now, do the best players get the money? I mean, where are you go? I'm going to flip that question back on you. You're the GM. You just came from the system. What's your thoughts?
You got to remember too, it's not just all football. Basketball is still taking a good chunk.
I totally forgot about that, to be honest with you. Taking
a good chunk of it, not the whole chunk, and not close to the football's chunk, but basketball's there, and then you have to have money available for other sports, which this does then prove that, though, that this will then allow you to have money for other sports. Now, we all know majority of the money is going to go toward football, and then the rest will be basketball, and then they'll have a small little bit for everybody else. But to answer your question, no, not everybody was getting paid $500,000 at Penn State. Now, I don't know what things look like now. Things could have changed quickly because from when I was there, when NIL started, to then when I left, it was night and day. You went from trying to make a couple $100, a couple $1,000 from an NIL, and then now you're negotiating these contracts with the coaches and your agents and all these things, and you're talking about hundreds of thousands of dollars, and it's crazy. It is. Now, the capital needs to come from somewhere. So if I was the athletic director, would I do this? Yeah, 100%. Especially if I'm in the Big 12 and I'm like, okay, how do we create a moat? Because you know that the Big 10 and the SEC, they see this, they're going to have to do something, right? Private equity is going to have to.
I think so.
Infuse into those leagues as well.
Mm-hmm. So you're going in the Title IX direction too. Title IX it's been around for a long time, and this could potentially be the cherry on top to really drive. I mean, we're talking about women's sports. Are they going to put the capital behind the women's sports? What's your thought?
I think obviously, if you're getting that much money, whatever, $50 million plus to be infused, you're going to be able to have some to go around for everybody, and that you're not going to do the deal if you're not going to have enough for at least a little chunk for each team. The perfect example is there's at Penn State, the hockey team is like one of the best teams in hockey, obviously, and then has a huge name. They always have huge players coming out of there. They have a kid, Gavin McKenna, who is young. I know he got paid a good amount of money. I don't know the exact number, but I know he got paid. But now with this deal, if you have another double of whatever their funds were for this last year, you could then pay that guy double what he got to then be able to do way more, push him way more, grow the media, bring more people around it, obviously get more players involved. I think it helps the schools as a whole if the other sports are also
Bleacher Report reported in the ballpark of $700,000 for your boy Gavin McKenna. Good for him.
Yeah, and we're talking a guy that was, I want to say, I think the first pick or a first round pick in the NHL, and then went to go play at Penn State. And I don't know, hockey's nuts. I don't even really understand how that works, but I know he was picked in the top first couple picks in the NHL draft. So being able to capture more and more good players, the wrestling team at Penn State is another good example. Those guys are going to have to start getting paid, or else they're going to just go and start going to the UFC and doing all these other things that you kind of see doing and Roman Bravo Young doing. So yeah, I think that there will be money to go around for everybody, but we ultimately know, the common theme's been, since NIL has been a thing, is football will dominate it, and then basketball will be a close second, and then the rest will be kind of dispersed throughout as there's the pie left over.
Yeah. I think that also the thing about infusion, blockbuster deals, right? That's what the NFL offseason is driven by. You see ex-quarterback, my buddy, Malik Willis, kudos to him, crushing. He was a backup, and now he's a starting quarterback for the Miami Dolphins. Blockbuster deal, $30 million a year. What a story, right? And it hits.
Yeah,
it hits every news outlet.
That's a great point. And not even on the news outlet side of things, but there's guys that were on Penn State's roster, and I'm sure it's the same story everywhere, that it's a true freshman or a guy that transferred in and just hasn't gotten a shot yet, but everybody knows, soon as somebody in front of him leaves, that guy, if they're not going to give him his opportunity, will either transfer or they're going to have to pay him to stay. Then ultimately go and perform for the school. This capital infusion gives them the opportunity to be able to pay them like they're a starter, even if they're not going to play that year, and then be ready to go and ball out the next season and ultimately show why they deserve the money that they got.
Yeah, it does drive eyeballs. It does drive conversation, especially in the offseason when people are vowing, especially sports are vowing for eyeballs, right? When your sport's dormant, you're trying to find out reasons for people to talk about it. And the NFL has been able to cover that. The NBA has been able to cover that. Will this now impact and really help other sports, Olympic sports, female sports, be able to drive conversations around why people should watch, right? Should women's basketball player signs multi-million-dollar NIL deal, I guarantee that's going to probably drive some eyeballs during the season to that specific team. it'll be something to watch in the future. Moving on to segment 3, right? The sports media infrastructure war. I think that this is a piece of kind of what we're talking about, right? The macro trends segment that really elevates this show specifically. Sports media infrastructure is being restructured in real time, and every restructuring creates new investable surface area. ESPN acquired NFL Network in early 2026. They took 10% stake. The NFL received a 10% equity stake in ESPN. Disney estimated the deal's fair value at approximately $3 billion. Jumping into distribution wars, ESPN triggered a carriage dispute with Comcast over NFL Network pricing. You're starting to see different groups. Dish is suing Disney for alleged antitrust violations over skinny bundle restrictions. Don't exactly know that one. Sam, maybe in the back, can you look up skinny bundle restrictions? I don't know. I've never heard of that in my entire life. And then Yahoo launching a dedicated sports business hub across Yahoo Sports and Yahoo Finance. 13 million plus unique viewers on Yahoo, and now they're launching a business hub across sports. You're starting to see people really come out and fight for those eyeballs. Media is as big as it's ever been. You're seeing it with social taking over. You saw it with social taking over, and now the war has began with the capital being infused. Liam, if you're one of these networks trying to really win, we see it with the Big 12, right, with Paramount, like we just spoke about. Like, how are you trying to win in the media infrastructure war itself?
Yeah, it's interesting, and right away my brain immediately goes to Netflix. If you remember this last season, Netflix, I think, had the rights and were the only people, I want to say, don't quote me on that, but to show the Thanksgiving Day games. And you had to have Netflix in order to watch those games. And during those games, if you remember, if you're watching them, at the bottoms and in between timeouts or whatever it is, they were promoting like a new Netflix series or a Netflix original and all these things. That's where I think they did a great job. Because if you're an avid fan of the Bengals or the Colts or whoever, if your team's playing, you're going to want to pay for a free trial or a subscription to be able to get on the platform and then watch the game. Ultimately, that's their moat. Like, nobody is going to sit there on Thanksgiving and be like, man, I guess I just won't watch the games because I don't have Netflix. They're going to go get Netflix.
They're 100% going to do it. Yeah.
Now, not only do you have to pay $100 pay-per-view, you just pay a $10 subscription and you can watch UFC whenever you want.
Right, and Paramount wins big. So what you're pretty much describing is the sports media wars aren't just about who carries the games themselves. They're about who controls the infrastructure around the game, and every company in that infrastructure layer is either a potential investment or a potential acquirer of other sports assets. It's an interesting thought because you're right. The eyeballs it's all about distribution. It's all about getting eyeballs on your product. And I remember Netflix has grown substantially. You're seeing Netflix now really as their own Paramount. I mean, you're seeing they're developing movies and shows like they've never before.
They have all the Netflix originals. All of the comedians are only doing things on Netflix. And I remember, too, even on the Thanksgiving Day when I was sitting at a restaurant watching the game, and they had it on there. And at the bottom, they were promoting Stranger Things. I think it was season 4 or 5, whichever the new one was. And everybody was talking about it, and everybody wanted to watch it. And if you hadn't heard about it, you were going to see it when you were watching football.
Right.
And that's their mode. That's how they're going to not only get eyeballs on their channels and Netflix in general, but then they're also going to promote all their other stuff they have going on as well.
100%. And I don't want to spend too much time. It really did tie in, but I do believe that, we talk about media taking over, and it is really the age of social. We'll see how they continue to leverage it. But jumping into the final segment, the validation first pattern that we're seeing. This is a topic that I really am interested to continue to learn about, because really, like, our fund thesis when we talk about what we invest in the New Era Fund, right, is products that are validated inside of the sports environments that we play in, right, where the margin is the margin of error is zero, right? You're eliminating the technology risk and the product market fit risk. The things that we invest in specifically for the viewers are things that the best in the world can use on a daily basis, whether that be a tech product, whether that be a consumer brand. It's trusted by these different programs, by these different teams, by these different leagues. You're seeing that same pattern. And what I mean by that pattern, the validation first pattern. Let me read you some stats. In defense tech, Shield AI raised $1.5 billion in Series G at a $12.7 billion valuation. Their autonomous drones were validated by the U.S. military before now entering the commercial market. Whoop went from the athlete recovery wearable to FDA-cleared ECG with blood pressure monitoring, validated in NFL training rooms, and now scaling into clinical healthcare, right? You're also seeing it in the vertical AI applications, right? AI built for specific regulated industries. They're the fastest growing in VC, right? Legal AI is an example. Construction AI is an example. Healthcare AI. They're all vertically integrating into that system because they were validated first by the most elite markets. Liam, this trend is continuous. What if you're a young founder and you're trying to tap in and try to solve a problem within an ecosystem? How are you going about it? And what's kind of your thought as you build your young company, but you're seeing the trend with the Palantirs, the SpaceX, the Shield AIs, getting that validation in the hardest environments possible, eliminating the risk, and then scaling. What's your thought?
Yeah, I think it kind of goes hand in hand with what you were just saying. We see this common trend of a founder attacking an industry to validate their product, and then ultimately knowing that that industry can then take them into all the other industries they want to get into. Even if the first industry is not the one that they're like, we're going to crush sales in, they ultimately know, say you want to start in sports just to create the brand. This is what we talk about all the time with our founders. Create the brand in sports. You do 2 million in sales, nothing crazy. You then take that and you take that into the healthcare world. That's where you can go 1 to 100. You go into all the hospitals, you get all into all the clinics, and that's where ultimately that's where the true revenue is going to come from, and ultimately the exit. And I mean, we see it. Defense tech uses the military, biotech uses clinical trials, sports uses the locker room. And that's specifically what we do. And when I'm talking to founders, obviously from a sports perspective, it's, hey, you have the right idea, but we see it all the time. Validate your product in the locker rooms, in facilities, grow the brand, use athletes to grow the brand, get athletes involved from an equity standpoint to get them even more excited about it, and then figure out, okay, is it military? Is it healthcare? Is it consumer? What's the next route you want to go to then ultimately take your company from a couple 100,000, a couple million in revenue to then 10, 100, the unicorn is. And
I'm going to make a little sports analogy right here, right? It's kind of like a season. It really is if you look at it. And then let me explain, right? You start, especially in college sports. I'm going to go back to my Penn State days. You start in winter workouts, right? What are you doing in winter workouts? You're going to the hardest, toughest environments possible. You're getting guys you got guys throwing up in trash cans. You got guys cramping out. You're trying to weed out the every little inadequacy possible within the team and make sure that you're mentally sharp, physically sharp, and emotionally ready to get into the season. That's kind of what they're doing on a daily basis with these young companies. They're taking these young companies and they're saying, let me go to the hardest place possible first. This is where we can mess up. This is where we can make mistakes, but ultimately, this is where you do your research and development. And once that research and development is completed, i.e. the end of winter workouts, spring ball, grueling 22-period practices, then you get into the season, and now you get to showcase it on the biggest levels. And I kind of compare that same way, right? You jump into the most massive, toughest part, and then now you're ready to scale into defense tech. You're ready to scale into biotech, healthcare, all these different applications. It's an interesting roadmap. I think it's one to win on, and it's definitely a winning formula, is in my opinion.
When you can validate, I mean, the perfect two examples are military and sports. And when you can validate a company or a product or whatever you're selling in some of the toughest environments, in some of the highest performing people, the people in the military and people playing a sport specifically at a high level, college or professional, if you can do that, who's not to say that it can't go to a consumer and it won't work in the consumer space?
100%.
Won't help your everyday person that's going to work a sales job and just is looking to get healthier.
Mm-hmm.
That's the route that you're seeing people take time and time again, and it's cool that stat we had of whatever it was. Let me actually double check on who it was. Shield AI, Andro, Palantir, SpaceX, all these huge companies that you hear being talked about all the time. They all started in a smaller niche. And example for this example in the military in a lot of cases, and then now you're seeing it specifically in sports as well. And it's just continuing to validate. And these founders are continuing to get on the train of doing it. And ultimately, those are the ones you see winning.
Well said. Well said. What's next for the Clifford brothers here as we exit this final part of the podcast? Clifford X Factor Camp, May 9th at St. Xavier High School in Cincinnati. Really excited about it. It's 1 week away when the podcast drop. We are going to be, days away. Really excited, thankful for all the sponsors that are partnering up, supporting Cincy Hat Foundation alongside Ted, and what he does on a daily basis with them. Really excited to be there.
Some of your fellow teammates are coming out as well, Sean, if you want to shout those guys out. I know we posted them, but if you want to tell the listeners who all is going to be coming.
Yeah, I mean, Ted obviously is going to be there alongside of Kendall Milton, our buddy Mitchell Tinsley, Dylan Fairchild. Who else am I missing? The list kind of goes on and on. There's going to be at least 10 guys out there. It's going to be a great showing for Cincinnati. I know we said it. We were on the news actually this past week talking about it, but more than anything, it is just such a humbling opportunity for the both of us. And personally, I don't want to overshadow you, Liam, in any way, but just being in the city, playing for the Bengals, it is really a cool opportunity to be able to do that in the city specifically. So really excited for that. May 9th, 10 a.m., show up, be excited, get your kids involved. It's going to be a blast. OTAs are now, I mean, Liam, you are reporting here. You know, I'm in week 3. You're reporting here at the end of the week. Excited to see you really drive into this next step in your journey. And then I you know, it's kind of crazy, but I mean, you should see downstairs. The amount of baby stuff that we have in our living room is just insane. We got the stroller set up. We got the bassinet set up. We got the little playground. I didn't even know that kids have these mini playgrounds nowadays, but we got the first on the way. Due date's August 8th. Counting down the days. We might have to, I mean, August 8th is quite literally the first weekend of preseason football. I am kind of freaking out about that. The fact that it's a brutal timing. Juliana and I did not time that correctly, I must say. You know, it is what it is. I'm not going to jump into too many details there. But it is what it is. But lots happening. But more than anything, personally, super excited for you, brother. Can't wait to hear how the weekend goes.
Yeah, appreciate it. Appreciate everybody tuning in, and I guess next week when we've been talking, Rookie Mini Camp will be over, and Clifford X Factor Camp will be over. So we'll have a bunch of fun things to talk about next week.
Yeah, personal and also macro. I mean, the world of sports is always evolving, and that's why you tune into Playbooks and Portfolios. We're your hosts, Sean and Liam Clifford. Appreciate you for signing in, and see you next week.